Well, we're at the end of August, the end of winter. How do the housing markets perform? That's the question I'm going to ask Dr. Andrew Wilson, Chief Economist of My Housing Market and Australia's leading housing market economist. And let me give you a spoiler alert. We had a very strong winter, but the markets were fragmented. Well, Andrew, I've just had a sneak peek at your data from My Housing Markets. We got through winter much better than many anticipated.
Absolutely, Michael. And of course, winter is typically the subdued real season of the year. I mean, we don't look at the summer market because that really does lag in terms of activity. But winter is a distracted market. A lot of people are on holidays. We have school holidays in the middle of winter. Particularly the higher priced market sections are affected by people taking holidays, seeking warmer climates, whether locally or internationally. So therefore, we see a difference in the mix of properties that are coming into the market, a lower proportion of higher priced properties. But generally, our markets have certainly performed quite well, notwithstanding what's typically a quieter period of the year. Certainly, if I could use a double word here, it's a very good springboard into the spring selling season. So,
If Andrew, the three rate cuts would have made a difference to consumer confidence, buyer confidence, and now seller confidence.
Yeah, absolutely, Michael. We know that nothing drives house prices higher than lower interest rates. And we actually see that in times where the economy is underperforming. We actually saw prices rise during that very severe recession of the early 90s, even though we did have very high levels of unemployment. Every capital city recorded increases in house prices, with the exception, probably not surprisingly, of the Melbourne market. And that's because lower interest rates really do activate affordability and eventually add to confidence. And that's what the nature of Australia's markets is, because more so now, but typically they are undersupplied, and there's always long queues, really, of people waiting to get into the housing market, notwithstanding what's happening in terms of the general economy. So yes, lower interest rates have certainly activated prices. We haven't got really the impact of the latest cut in August with this data. And as I said, this is a very positive entree into the spring selling season. And spring is typically the strongest period of the year, because we do see, as I was relating to the mix of property, we do see a higher proportion of higher priced properties coming into the market. And that's particularly salient for the Melbourne market, because it does have the strongest prestige market of all the capital cities. And we would expect, because of that, and given those lower interest rates and a sense of rising confidence, that the spring selling season will be quite positive for the Melbourne market. But let's have a look at the figures, Michael.
It's been the sixth month of consecutive monthly rises nationally, as we can see on the chart here. But that's nationally. Clearly, there have been differences from state to state.
Well, the national capital city median house price, which of course is a weighted average median house price, so it does favour the bigger capitals, Melbourne, Sydney and Brisbane, because it reflects the number of sales. But the national market was up 0.9% over the August quarter compared to the July quarter, and is now up 6.3% over the past year. And I think that if we continue to see those annual growth rates accelerate, which they have been over recent months, Michael, we will exceed both what was reported last year in terms of prices growth, national annual prices growth, and then the previous year. In fact, I think that we could get closer to 9%, given the momentum in the market at the moment in terms of national house price growth. It was interesting that...
Now, Andrew, before you go on, I'd like to explain to all the people who are new viewers and listeners to this that you report quarterly median house prices, but it's not the change over the quarter. My Housing Market uses a methodology that the ABS used to use, which is giving a better depth. So you're comparing 3 months change from the 3 months before. Is that the best way to explain it?
Yeah, it's a rolling median price, Mark.
So people don't think when you said it's gone up 0.9 over the quarter, it actually went up 0.9 over the month compared to the 3 months before.
Yeah, so you can sort of multiply that by 12, to get an annualized outcome. And of course, when you do that, you can see that it's approaching double figure growth. So, but it does allow us to capture a 3-month period of prices growth, which is robust enough to give us reliable medians. But we then transition it from month to month. So we see that underlying trend rather than compare it to the period 3 months before, which some other data models do. So you tend to miss that underlying trend. And as I said, we've certainly seen a robust national median house price position this year, and lower interest rates are certainly driving that, and we shouldn't be surprised that that's the outcome. But Darwin has been a market that's really picked up this year, Michael, after a couple of years, well, maybe more than a couple of years of subdued growth. It was the top performer over the month, up by 3.6%. It can tend to be a volatile market, Darwin, not just because it has a smaller proportion or a smaller level of house prices compared to the other capitals, but also it is impacted by seasonal effects such as through the wet and the dry. But Sydney's been a market to, I guess we've been focusing on in terms of auction clearance rates, because the Sydney market has been recording 80% or near 80% clearance rates for most of the last month or so. And of course, no surprise that that's now translating into prices growth up by 1.4%. But again, the superstar of the major capitals, Michael, is the Brisbane market, up by a very strong 2.2%. That Brisbane market keeps on giving to homeowners. I think that we're going to see in excess of 10% growth this year in the Brisbane market, maybe even approaching 12% growth, but very strong market. Brisbane, top of the major capitals, up by 2.2%, Perth up 0.8%, Perth up 0.6%, and Canberra higher by 0.2%. The Melbourne market was not surprisingly flat over the August quarter compared to the July quarter, Michael, and that's because, as we discussed before, that Melbourne market has the highest proportion of higher priced properties, prestige properties in its mix, and therefore it is impacted more than the other capitals by the quieter winter selling season. But the offset to that is that it will be benefited from the spring selling season when we do see a higher proportion of higher priced properties. And just to sort of reinforce that, Michael, we're now clearly seeing for both units and houses in Melbourne annual rises in prices. We haven't seen that for a couple of years. But in Melbourne are now up for houses by 3.1% and rising. So it's that annual change that is the most important. That just shows us that compared to the August quarter last year, Melbourne is now 3.1% higher. And again, that sort of validates the position in terms of the prestige market impact over winter not being as strong in Melbourne on the negative as it was in previous years. But no surprise that Brisbane is the leading capital city market in terms of annual growth, up by 11% over the past year so far, and certainly has a head of steam up that Brisbane market. And as I mentioned, it will likely end up at least 10% higher over the full year this year, and maybe even approaching closer to 12% plus. And that Darwin market, certainly in strong recovery mode, up by 16.3% over the past year, Michael. But all the capital cities are recording positive growth over the past year. And even Melbourne, is as the underperformer, appeals as having the best potential in terms of exceeding what it's grown by over previous years this year. So again, lots of momentum in the market. No surprise, given what we know as being the impact of lower clearance rates. And we still haven't had the full impact of that August cut in our markets. And it'll be just the icing on the cake for the spring selling season, in my opinion. Unit prices were also positive again over August. They were up for the 7th consecutive month, up by 0.6%, not quite as strong as house growth, which was up by 0.9%. And also its annual growth is 4.6% up on the August quarter last year. Again, not as strong as annual house price growth. Adelaide was a top performer over the month, up by 2.2%. Brisbane, again, strong results for Brisbane for units, up by 1.8%. Canberra starting to look a little better than it has in recent times, up by 0.9%. Perth up 0.8%. And Melbourne also looking positive for unit price growth, up by 0.7%. Sydney actually fell by just 0.1%, Michael. So a little bit of a surprise on the outer there, the Sydney market, which was certainly very strong in terms of house price growth. And when we look at the annual growth rates, Brisbane, Adelaide and Perth have just cleared out in terms of annual prices growth. Brisbane up by 15.6% over the year to for the August quarter this year. And when we look at the past 2 years, Michael, Brisbane unit prices are up by, can you believe, 44.5%. So that's a big dividend for unit owners in the Brisbane market.
I remember, Andrew, a couple of years ago, and there was an oversupply at the time, when people said it's going to fall, it's going to collapse the Brisbane property market, apartment market. No one wants to live in apartments in Brisbane. Boy, have things changed.
Well, these are extraordinary results for Brisbane, Michael. And the point to both houses and units in Brisbane, Michael, there's just no sign of it slowing down. We would have thought that it would be pausing for breath, would have reached affordability barriers, as we've seen recently in Perth and Adelaide, which have moved through that with lower interest rates. But that Brisbane market has just not looked like slowing down, and is not looking like slowing down now. And as we saw of the major capitals, it was again the strongest result for house prices over the August quarter.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, there was news only a couple of days ago that the Albanese government's bringing forward the first home owner deposit scheme, that people can buy a house or an accommodation in Brisbane up to $1 million, Sydney $1.5 million, Melbourne $950,000 with a 5% deposit. They're looking after the lender's mortgage insurance, so to speak, for these first home buyers. That's actually around the median price of properties in these areas. So there's going to be lots of people who've either saved some deposit or going to get money from the bank of mum and dad at a time when mortgage costs are coming down, consumer confidence is higher. It's going to put fuel to the fire that we've already spoken about.
Absolutely, Michael. This is extraordinary. We're going to see a surge in demand, as we always have when first home buyers are offered incentives. This is a significant incentive. It will push prices up, make no mistake. We're still chronically undersupplied in our housing markets, and it will focus, even though the limits for the prices that you can pay have been increased, it's still a narrower part of the market. And I'm just concerned that, as with a lot of these particular initiatives, that it's great for those that can actually take advantage of it, but those that can't take advantage of it will be forced to pay higher prices because of the surge in demand. So even though it's good news in the short term for those that can get this particular policy enacted for themselves, those that can't are going to have to spend a little bit longer, maybe a lot longer, saving to get into the housing market. And as far
I fully agree with you, Andrew, but interestingly, Treasury came up with the figure that it's only going to push up property values 0.6% over the next 5 years. Rubbish. It's going to do more than that before Christmas time. I don't know where they got their thoughts from, because the suggestion is, their estimates are 70,000 first home buyers are going to take advantage of this scheme in the first 12 months. That's the government estimates. Now, they're not all going to do it in beginning of October when it cuts in. Some people are still at home with mum and dad. Others have got to save a bit more. Others are tenants who are going to still have months to go on their lease. But boy, is it going to put a surge in the market over the next 6-9 months.
Well, it'll be another test of what has been a very questionable forecasting record from the Treasury in regard to the housing market. We may get plus 10% growth in house prices this year, without that add-on from the first home buyer policy. So we'll wait and see. 0.6% over 10%. I'm not so sure about that. Problem also, Michael, and I don't want to be a Grinch here, is that we had some sobering inflation news released last week.
Yes, it
It's
crept
just
up a bit.
well, it didn't creep up a bit, it leapt up a bit. The problem with that is that the reason it's now rising, it seems, certainly it was electricity costs that did push the inflation rate up. And let's remember, it was Treasury and the government that introduced that support for homeowners' electricity bill in last year's budget, which is now run out because it ran for 12 months. So what we're seeing was the July, which was the last month, I think, or the first month when we didn't have that support from the government. We've now seen inflation leaping up near to the edge of the RBA's target for inflation. So, hey, this is 1 month. Let's wait and see what happens the next month over August. But if we do get another spike over August, I think that it will bring into question what was perhaps, if the data had have continued to be positive in favour of the RBA's targets, would have been perhaps a Melbourne Cup interest rate cut. But I think if we get another spike in inflation over August, then I think perhaps that would all bets are off. So,
quarterly set of figures coming
Yeah.
out, and that's the one that the Reserve Bank spends a bit more attention to. But it'll be interesting to see.
And that comes out on the 29th of October, Michael.
Yeah,
So,
just before Cup Day.
So they will wait for that, as they did for the June quarter data, before they cut rates over August. So as I said, I'm not suggesting this was 1 month. Well, let's wait and see what happens to next month. Fuel prices have stabilised. That's a positive for inflation. And we will still see a decline likely in August fuel costs, not as strong as it has been, but certainly that will be quite. But it is electricity costs that are now the key focus for inflation going forward. And of course, the key focus for interest rates. When you're introducing 70,000, whatever it is, first home buyers into the market, the last thing you want when they're borrowing 95% of the property's value is in any sense that interest rates not only will stabilise, but, they might rise. I'm not saying they will. We need to wait for that, for that data, because that'll give us a true sign, because that will be July and August, but certainly interesting times with the latest inflation rate, maybe making Treasury a little bit more nervous in terms of its play in the housing markets. It'll be interesting to see what happens, but nonetheless, housing markets will continue to be positive and to grow generally, notwithstanding certainly added to by first home buyers. I think a little bit more than 0.6%, but
over 5 years.
Yeah,
Rubbish.
over 5 years. Anyway, they would say that, wouldn't they? But as I said, we've certainly got a very positive housing market at the moment. We've still got, in a sense, an interest rate cut in the bag, which is the August rate come through. We are heading into, from Monday, the strongest part of the year in terms of the house prices, in terms of housing market activity. And we have markets, particularly the Melbourne market, which is certainly in revival mode now and is looking to its upper priced market segments to also revive during spring, as typically it does. So certainly most markets are enjoying a very strong period at the moment, Michael. In fact, just about all markets are, and that will be enhanced by not just the seasonal effects of spring, but also by that lower interest rate. And we really don't have to worry about interest rates now until Melbourne Cup Day, which is a little way off. So let's worry about that later on.
Well, this is our monthly statistical look at the housing market. We'll be back next week with our weekly Property Insider chat. Look forward to catching up with you. And in between, there's another weekend coming up, so we'll see what your auction clearance results are that you report on LinkedIn and we report on the Property Update and on our social media. Catch up with you next week, Andrew.
Yeah, thanks, Michael. We'll discuss that inflation data in full effect on Monday, which was a bit of a shocker all around.
Well, yes.
We had signalled that there might be some issues with that government subsidy for electricity once it ran out, but we'll see what the actual story is behind that rise in electricity, which was very strong.
Thank you.